Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, June the 21st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, but we did have Mario Draghi speaking early this morning, and we have Janet Yellen, who is the Fed governor, Fed chair, I should say, speaking in front of Congress. Last I saw, they were talking about Frank Dodd again and trying to help out the small banks, but they seem to talk about that every time she goes in front of Congress for the testimony. But anyway, we also have Fed member Powell speaking later on today, so not a whole lot going on there. The overall markets, as you can see, /CL crude oil just was really testing that $50 a barrel area yesterday, and today it's really come off, down 90 cents right now, close to the lows of the day. We are starting to see that separation between crude oil and equities. Equities are actually up on the day, as you can see here from the E-mini NASDAQ /NQ, up about 11 points on the day, but right in the middle of the overall range. Just everybody kind of taking a breather right now and listening to Janet Yellen's testimony, I guess. Onto the E-mini S&P, as you can see here, up 4 points on the day for the most part, right there at the value area. So that's where the most time and volume has been spent over the past several weeks, and it doesn't look like it really wants to go anywhere today unless something really out of line is said by one of the Fed governors. I don't really see us having much of anything other than an inside day, which we're pretty much seeing right now. As you can see here from the E-mini S&Ps, right inside of yesterday's range for the most part. We gapped higher on the early morning open, and then kind of this was the better part of the day, but we are really right inside of this, despite the fact the value area is slightly higher than that. Just as a breakdown on the daily chart, on the candlesticks, it looks more like an inside day. This doesn't really make it look like that much of an inside day. Onto gold, I wanted to bring up because gold is down almost $20 today, really coming off. The overall market's just taking profits from what I can tell, really consolidated up here. But this candlestick, if you guys remember, this is when I started getting short gold. It was about the same day I started getting short TLT as well for the bonds. And having said that, with the bonds coming off like that, the overall markets are coming off as well. But with the bonds coming off, it's a little bit strange. The Goldman Sachs, some financials really looked good yesterday with that higher yields that I talked about with doing Capital One Financial. But there were several bank stocks like Goldman Sachs that gapped higher, created this like shooting star. Now this doji right here is more powerful when it is in a top of a pattern, maybe like up in this area. But it gapped higher, really looked solid. That's when I talked about buying that Capital One Financial. But then at the end of the day, really slammed down and finished very close to their lows of the day. That's when I decided I was covering my Capital One Financial. So I just put it on yesterday, just did it about face, and decided to pull the ripcord on it. And Capital One Financial, if you remember, I had on the July 60 puts that I sold, and I sold them for 52 cents. I ended up covering those for 64 cents. So I just decided to puke out of them because of what Goldman Sachs and several of the other financials were doing. And I might actually look to change my position and go short these. This is Capital One Financial. As you can see, they gapped higher but slammed down to lows of the day, all the way into the day today, confirming that bearish assumption there. So that's why I decided to cover that. I covered it yesterday though. Today looks like it was a good choice to do that. Now with TLT, I talked about this when it did the shooting star, gapped above, slammed down. That's when I decided to get short that a little bit earlier, even before it got confirmed the next day. And I did the July, sold the 138 calls and bought the 140 calls. So I did that as a call spread, the 138, 140 call spread in July. And I originally sold it for 64 cents, covered it yesterday for 34 cents. You probably get it a little bit better today. But I thought I was going to be able to get 50% of my max profit. Started at 32 cents and ended up bidding it up a couple pennies before I got filled. And then this was the earnings trade that I tweeted out yesterday with CarMax, ticker symbol KMX, and did it very late in the day. Decided to go into this as an earnings trade because it had really high implied volatility, and I was able to do a one standard deviation one standard deviation strangle, I should say, for almost 90 cents, and almost got 50% of my max profit in one day. So I did the June 45 puts with the 57.5 calls, and that created that strangle. I originally sold it for 90 cents, bought it back this morning on the open basically for 55 cents. So that was a nice little trade there. They don't have weeklies, which is what I would have liked to have seen, get some of that real theta decay. I just got the volatility coming out of it, which sucked out a lot of that premium, so I was able to buy it back for a 35-cent profit, which was a nice little earnings trade there. Friday, we're going to be doing a webinar on a poor man's covered call. Now, poor man's covered call is great for the entry-level trader into options and or investing. If you don't have a lot of money in that account, this poor man's covered call acts like a long call position, and then we're going to cover it to lower that overall basis. So over the course of the time, we're going to be trying to get that cost basis down, which increases our profit potential. So stay tuned for that. You can go to protraderstrategies.com, sign up for that, and then we're going to be going on and doing a poor man's covered put the following week. So that one's a really good one also, especially because we have a lot of long stock positions in our portfolio. This will give us some short deltas, and that means, when you're long deltas, you are beholden to the market going up, and if you can get that a little bit more neutral by selling some options and selling some getting short delta in there, you can make money when the market goes up or down, right? So stay tuned for both of those. Go to protraderstrategies.com, sign up for that. That's all I got for you guys today. If you can't take that, take it easy.